So, what if I told you that your biggest tax opportunity for 2026 might still be ahead of you? Most people assume that their tax bill is already set. And the truth is, we have 5 months remaining in the year, and there's still time to implement strategies that could drastically reduce your tax burden, but only if you act now before December 31st. Over the last 25 years in financial services, I've noticed something about personally myself and many of the successful professionals and business owners that I meet, and we are still often behaving like taxpayers instead of business owners. And this applies to those of you that are W-2 as well. You have your own family economy business that you're running. So what does that look like? We work hard all year. We wait then for our W-2s and our 1099s and our K-1s and investment statements to arrive. We hand them everything to the tax prep person and fingers crossed, hope for the best. That's tax preparation. Now, tax strategy is very different. Tax strategy means that we are meeting throughout the year. We're forecasting your tax picture and we're taking strategic moves before December 31st. Well, you still have time to actually influence the outcome so that by tax season, there should be very few surprises because you've been planning along the way. So this is especially important if you are earning $150,000 or more annually. You own a business, even if your earnings aren't there yet, or this is a big one, especially if you have significant assets in 401ks or traditional IRAs. Maybe it's a SEP IRA or other tax deferred retirement accounts. So depending on your situation, there are some very time sensitive opportunities to take advantage of the available tax credit strategies before the year end. For certain qualified clients, these credits can provide substantial tax savings and in some cases even help offset the taxes associated with really strategic retirement account repositioning. So once the calendar year turns, many of those opportunities are no longer available. So this week alone was exciting. I met with one of my high earning W-2 clients who just assumed that the tax bill for the year was already preset. And after reviewing the situation, we'd already done some of the strategies and we implemented a few more in the coming months. We identified that he could actually let his employer know that they can stop having federal taxes withheld from his paycheck. Imagine that. So every situation is unique, but one principle is universal, and that is that the best tax planning actually happens before year end, not after it. So I'd love to help you determine whether there are still opportunities to legally reduce your 2026 tax burden. So schedule time on our calendar for your mid-year tax checkup. And in that conversation, we're going to look at whether you're behaving like a taxpayer or you're thinking like a business owner. We'll look at strategies that really will legally reduce your taxes before your year end. Maybe some of these tax credits are available that could benefit your situation. I won't know until we meet. And really how to align your tax strategy with your long-term wealth, retirement, and legacy goals as well. Don't wait until tax season, friends, to discover what you could have done. So let's make sure you pay your tax bill, but you're not tipping the IRS too much. Blessings, everyone, this amazing life journey, and we'll see you soon.